What's going on, y'all? Welcome back to part 2 of Scalp Basics. Today we're going to be discussing the two types of orders that I use exclusively when I am scalping. Now, the order you use will depend on the market conditions that you're seeing in front of you. The first type of order that you can make is a limit order. And a limit order basically says you want to pay X amount for the option or for the stock, and or you want to sell it at a certain amount. So there's pros and cons to using limit orders when you're scalping. Number one is that since you're scalping momentum movements, sometimes when you try to place a limit order to buy something, it will have already moved so quickly that by the time you place the order, it won't fill because price is no longer there. So in order to get around that, you're gonna have to use a market order when you're scalping via shares or options. If you're using market orders with options, you're going to want to make sure that you're trading a highly liquid market or stock, which means it's got to have a lot of options trading volume. The reason is you want to be able to get filled right away at a good price. There's something called the spread, which is the difference between the bid and the ask. And when you have a stock that doesn't trade much options, that spread is going to be very wide. So when you place a market order, it's going to fill you at whatever the current price is, and oftentimes the order is not going to fill at a favorable price. So number one is avoiding stocks that don't have high liquidity in options. Now with market orders, they are used when you have urgency. So when I'm scalping, there's urgency involved because when you start to see price breaking below previous lows on a 1 minute, 2 minute, or a 5 minute chart, that's often going to provide a fast move. And if you're not ready with a market order to enter as soon as you start to see price breaking below the previous lows, and instead you try to place a limit order, you'll likely never get filled on your position. And it's going to be a lot harder for you to take advantage of these movements because the market is run by computer trading algorithms, and those machines run much faster than what we can react to. So using market orders in situations where urgency is involved is very important. So number one, I'm always using market orders when I'm entering in positions. The reason is, again, once you start to see price doing what you want it to do, it's often going to move so quickly that you're not going to have a chance to place a limit order. Now, I also use market orders to exit my positions when they're not working. So if I enter in a position via a market order and I see that price isn't doing what I thought it would do, it looks like the trade is going to go against me, or it has already gone against me a bit, I'm going to market order out. I am not going to try to sell it at a particular price by using a limit order, because again, when price moves and these machines drive price up and down, it often happens so quick that you don't have a chance to react. So if you don't get out with a market order, you're likely going to be sitting on a bigger loss if you're wrong. When I get in a trade, I'm using a market order, and when I'm wrong on a trade, I'll get out via market order as well, or if I'm not sure. So if I get in a trade and it's starting to just not really move the way that I thought it would, I might just cut it right away. I might take a small loss, I might have a quick profit, I might be flat. The goal is to have urgency and be in and out with market orders. Now, one of the greatest tips that I can give you in terms of scalping is when you do enter a position and it starts to work for you. For example here, if you enter into a position and let's say the spread right now is $5.45, and I think based on the chart that this stock could move down another dollar pretty quickly, I'm gonna set a sell limit order and I'm gonna add on about another 40 to 50 cents onto the current ask. The reason why I do this is because once price starts to move in your direction, the options premium are going to spike in volatility, which is going to spike the value of the option. And this is going to allow you to profit from it very quickly. So again, what are we doing? We're taking advantage of these robots that are driving the market prices. You're not fast enough to catch these quick moves. If I don't set a limit order when the position is working in my favor and I try to time it, oftentimes I'm not going to get filled. I'm going to miss the trade. I'll give up profits, and that's frustrating. So that's one way that I use limit orders when positions are working in my favor. Now I have a ton of live examples of how I'm using these limit orders in the Scalp Mastery series videos. So please again, check that out because this will bring it all full circle. And so when I'm in a position and it's working for me, I'll set that limit order slightly higher than the ask. And as the price goes in my direction, the machines are gonna fill that order instantaneously and you're done, you're out of the trade. Now you'll see in the live examples, sometimes a trade could be working in your favor and you could have a limit order in. What I always do is I have my limit order set, but I have my order up that I can cancel that right away and go straight into a market order. So on Tastyworks, there's a way to click replace order and you can have that ready as a market order in case it stops working in your favor. So if I see that, all right, it was working in my favor, it's almost at my sell limit, but it doesn't look like it's gonna quite get there, I can either adjust my limit order lower so that I can fill right away, or I can just simply change it to a market order and close the position and take the profits as is. Now, when you do a market order, you're not specifying the price that you're looking for to get for your contracts. There could be some downfalls to that because if you're not trading a very highly liquid stock with options, then when you place a market order, your fill, which means the price that your order goes through at, may not be the ideal price. So you want to make sure that you're trading options that are highly liquid. Names like SPY, Apple, Tesla, these names have hundreds of thousands of options being traded on it every single day. And that's exactly what you need to be able to scalp effectively, because you're not going to lose money towards slippage. And the higher the spread, the more slippage there is, because you are losing money to that wide spread. So that's a quick recap as to how I use limit orders versus market orders. And again, you can watch all these different examples live through the Scalp Mastery series. And I'll continue to upload new examples, but I have about 10 different videos right now, all about 10 minutes long on live trade examples. And that is really what's going to help tie all of this together, because everything that I'm talking about in the basics are things that we discuss while we're trading live in real time. All right, hope this was helpful for you. If you got value out of this, please hit the like button, as well as comment below if you found it useful. And if there's something that I missed that you want to see more of, please let me know. Thanks for watching.